So what's happening with our local real estate market? Well, we're starting to see two changes develop, two trends that are different than typically what we see this time of year. We are seeing a welcome pullback in interest rates for one, and number two, we are starting to see the inventory actually grow some. Well, welcome to my market update. I'm Harold Powell, a local real estate agent serving Ventura and the surrounding community. So if you want to stay up to date on all things real estate for Ventura and the surrounding areas, I suggest hitting the subscribe and bell icon to be notified of future content. All right, so let's start with interest rates. Well, the good news is that the mortgage rates declined after the jobs report came out, and we were sitting actually in the high sevens in the latter part of October. So by early November, the rates dropped a half point, with rates down below a 7.5% range. And the short explanation is the bond market is anticipating that the Fed may be pausing indefinitely. And additionally, the Mortgage Bankers Association reported that the mortgage applications actually increased 2.5% from 1 week earlier, from November 3rd, which means a potential uptick in demand. So let's address what trends are kind of out of character for this time of year. Now, we typically expect the number of new listings coming on the market to decrease. So looking at the blue line here, which represents the new listings coming on the market, we see the new inventory decrease 5% from September to October. Not surprising, but what is surprising to see is that the overall inventory is higher in October than the summer high of July of this year. In a normal market, we'd actually see the inventory levels drop from summer to winter. So the question is why? Well, the reason being is the number of pending sales has dropped more than the number of new listings coming on the market. And the pending sales representing by the red line is actually down 24% from a year ago. And the number of new listings coming on the market is down about 8% from a year ago. So the decrease in the demand is what is causing the overall inventory to actually rise. So if this trend continues, we will likely see higher inventories for next year. And another way to look at this is at the amount of inventory based on pending sales. Now, most of the spring and summer months, we range from 1.1 to 1.4 months of inventory. Now we're up to roughly 2 months of inventory for October, based on, again, the rate of pending sales. And currently we are seeing the months of inventory just above 2 months currently. Now, 2 months of inventory is still considered a seller's market, and while we are seeing property also take a little longer to sell. Typically, as the market pace slows, we will see prices flatten out in this type of environment, and that's exactly what we see when we look at the median sold price. The median sold price has been ranging between $840 to $850 the past couple months, so it's staying pretty level. So my takeaways for the buyers and the sellers are as follows. For the buyers, fortunately, rates dropped at about a half point, and you may have an easier time even trying to purchase a property with fewer buyers in the marketplace during this season. And for sellers, you may need to exercise a little more patience since, again, the pace has slowed. And the silver lining for sellers still at this point is that inventory is still low, which means you are not competing with that many homes. Now, if you have more questions about buying or selling, give me a call. My phone number is in the description below. Thanks.